Hi, this is Ken Lake with MAC's Technical Market Update for Wednesday, June 21st. Happy summer solstice, everyone. I'm going to start with July corn tonight. July corn has been on a break now for a couple of weeks with a couple of days higher in that couple of weeks, but tonight we find ourselves very oversold and with support perhaps testing this 363 level once again. Bear in mind that we have some pretty important crop reports coming up at the end of the month here in just less than 2 weeks, and would probably offer some sort of support with those numbers. And if not, we would certainly see some buying interest probably on this weakness right here. So really don't look for either July or December corn to get a lot weaker in here, but because of this oversold condition, so we may be going down, be done going down for now, but call 363 support in July corn. We'll be switching to the September futures next week, so we have another week or so of dealing with July futures. These corn looks similar in as much as the big break we've seen here in the last couple of weeks with a very, very oversold condition. Support's going to be 382 and longer term support 360, but just don't think we're gonna see that until at least after the June 30th report, and the market has a chance to digest the final planted acres number out of that report. July soybeans, overhead resistance 945. We touched there twice, got turned away, so we got a bit of a double top there, even though I don't necessarily put a lot of stock into those sort of patterns technically. More concerned about whether we're going to test these long-term lows down here around 890, and we're pointing toward an oversold condition here, so we do have some downside risk here. We'll call short-term support 910 with longer-term support 890 in the July soybeans. November soybeans with a similar oversold condition here. Long-term or support at 907, longer-term support down around 875, 880. We've talked about the risk of going there many times. We'll have to get through June 30th report and look at stocks and final planted acres to actually determine whether we're going to go there or not. Finally, July wheat. July 17 wheat. One day down here today. We've been several days higher. We're overbought. We've seen a corrective sell signal here today on this lower value. My sense is that as we get closer to September futures and get ready to roll to September, some of those sort of things, we probably have downside risk into the 450 or even 445 range where this congestion is. But fundamentally, we've got a pretty short crop out there with lower acres, etc. So I don't think this market's going to let us go a lot lower than this mid-range Fibonacci support values here around 450. Should see buying interest if we go there. And we could go there because we're still a bit overbought here. So look for a little more downside break on the wheat. But for now, let's call it 450, and then see where we go from there.